In the middle of the night, he suddenly smelled like something like a bit fishy, like 超生 like that.
Most majority would be like fearful, but some will take the opportunity.
EC is a bit special because of the kind of allowance that the government has provided. Welcome back, everybody, to Three Stories Next podcast. Today we have Silas, Christine, and myself, Jason, back again. Today our topic is gonna be a little more interesting, not so much specific on development itself. These days, if you are a buyer yourself, right now you're seeing a lot of news in the market. You might be feeling a lot of different mixed emotions. So today what we want to do is we want to talk about buying in 2025. What are some of the common pitfalls that you guys might encounter? And maybe hear some perspectives from Silas, from Christine on the ground with their clients themselves. So for you guys, how are your buyers feeling these days, especially in comparison to the past few years? Silas, you want to kick it off?
Yeah, sure. So having to serve a couple of buyers these days, at this time of recording, there's a lot of news going on around the world, macroly, and there are a lot of, I would say, uncertainties lah. So for my own buyers, I think it's important for us to always drill back to the facts and the data points of the past to study whether world events and things happening would really affect prices or how it affects prices, and to see whether or not it's a right time to make a move lah. So generally people are cautious, but those who know would know that it is still okay to purchase.
Right. Christine, on your end, how are your buyers feeling?
Yeah, I think I will agree to what Silas said. A lot of people are actually very confused now because there's so many mixed news, right? Like new launches that sell out during the weekend, new launches that didn't do very well, only saw about 20-30% during launch weekend. And then with all this news coming, people thinking that recession is going to come, the Trump making just random decisions here and there. So I think there will be two types of people. Most people are just very confused, but most majority will be like fearful, but some will take the opportunity lah. Because there's this quote, right? Like, seize the crisis lah.
Is it the opportunity in a crisis?
Yes, correct.
The Warren Buffett.
Yeah.
Right.
Yeah.
Okay,
So I think there's very mixed reviews and mixed sentiments to this lah.
Yeah. So overall, two kinds of buyers right now, those that are a bit more confused, uncertain, and those that, like Silas mentioned, those that are a bit more into the opportunity, where they might still continue their plans because the market might act as an opportunity for them rather than a crisis, I guess.
Yeah.
So, yeah. Okay, before we go in more specifically into the discussion, just a bit of a disclaimer. Today, whatever we share is just for informational purpose, not any specific recommendations per se. So speak to your trusted real estate advisor before you make any decisions. Today, really about chit-chat and hearing different point of views.
Chit-chat.
Okay, so something that we also want to talk about and have been talking about in the past few quarters, few months is the rising price itself. So both on the HDB side and on the private side. Since the recent downturn in the property market from 2013, ever since the 1920 period, it has always been on an uptrend. So this is from HDB resale price index, and this is the property price index for the private non-landed market.
Right.
What we can see is that very similarly, since the COVID period until now, it's up and up and up.
Yeah, people call it the COVID surge, right?
Yeah, exactly. So I guess some buyers might also be thinking, how long can this surge continue? I think that goes back also to a little bit about what drives property prices. So maybe in your own opinions, what do you guys think will drive property prices? And do you think this COVID surge is going to last even longer? How long will it last? Just your point of views.
Silas?
Wow, the arrow come very fast. I feel that HDB prices will still continue to climb, but at a slower pace. But solely just because not just on HDB, but for private on a macro level kind of things, right? Raw materials and items just grow over time. Even if I don't look at the market, I don't look at what's going on in the world or micro or whatnot, right? A simple piece of plastic or tissue paper will just inflate in price as time goes by. It's just how it works. And same thing for material costs. When you are building the actual building with the concrete, the cement, the window grills, the steel, aluminium, etc., these are things that has to increase in price as we go per se lah. So just on material costs alone, if the building itself physically is getting more expensive, I find it a bit hard that when we are selling to people, we can sell cheaper. That's how I view it.
So you're saying overall, with inflation driving the overall market prices up, property prices will still climb up as well.
Correct. That's what I feel.
Okay. What about your side, Christine? What are your thoughts?
I mean, because sellers kind of like break it to like HDB and private. I think for HDB wise, we need to understand that HDB is supposed to be affordable living. So this search has been so crazy that people keep asking, wow, next time how my kids buy house, you know? But I think like what sellers say is going to slow down. But I think the price will probably still be at a very stable, slow growth. Yeah. Why? Because if we look at demand and supply for HDB, right? Yes, government is pumping a lot of like BTO and like your sales of balance flats out. But if you look at supply itself, actually this year, the units that are going to MOP is only about 7,000 flats. Yeah. As compared to the few years ago. So that's why because of this, I think property prices wise for HDB might still slowly rise, but at a very like a more stable pace.
Right.
Yeah. And I think private wise, like our government will not allow property prices as in the private sector to drop, because I think it will affect a lot on our like economy and things like that. So yeah. So I think
will go up in short.
Yeah, but like maybe more in a more stable pace rather than that crazy surge period.
Right. So Silas, his end is more about inflation driving prices up, and your side is about supply being a bit more limited, as well as government's intention to keep property prices on a uptrend. Okay. Beyond that itself, we also talked about HDB, talked about private.
Yeah.
Today, if a buyer is in the market, what kind of housing type would be better for them? Is it buying a HDB, buying a condo, buying an EC, or even buying a landed? How would a buyer approach what fits them the most?
I think for me, the best housing type for whoever it is the one that suits them best. Yeah, so based on like their circumstances, their finances, their situation, their property goals even. Yeah. So there's no like one size fit all or one pathway for everybody. Yeah.
If you could share an example.
I mean, okay, like for example, if let's say just for us, if we have all the money in the world, we can buy any type of property.
Yep.
What kind of property type will you buy?
Oh.
Are you a landed?
Oh, okay. Very good question.
Person?
So I'm really not a very landed person, because so I think like when you say like we have all the money in the world, what will we buy, right? I think a lot of people will go straight into buying like a landed property. But for myself, I've never lived in a landed property before lah, but I have like clients who live there, relatives who live there, and the self-maintenance work is really quite intensive in that sense. And it's not just about costing. I'm just generally not I don't like 麻烦 So like when things like break down, even if I'm not the one to repair it, to arrange for people to come and repair. Like okay, so very good example. Just 2 weeks ago, I met with a client thing near the Coven area. It's a corner terrace lah. So he was telling me like he in the middle of the night he suddenly smelled like something like a bit fishy, like 超生 like that. So he went down to the kitchen. He thought he forgot to throw like the rubbish. Then he went down to the kitchen. No leh. Then he went back again. But it's only when he went back up, then he can catch the smell. So he spent like a good 15 minutes just walking around the house trying to find the source of the smell.
Dead animal.
So
yeah, exactly. End up, right, there's a dead rat at the aircon compressor.
Oh my gosh.
Yeah, it's crazy. And then he had to spend another half an hour cleaning up the dead rat, disposing everything, sanitizing everything, and like the rat has been rotting there for don't know how many weeks already. Like really, that there's maggots or yeah. So and that is actually one of the key reasons he called me to like because he wants to sell the place. He like I cannot live like that anymore.
Landed.
Yeah, and he's staying there alone. So it's like. Yeah. So when I hear stories like that, I'm thinking like, okay, I get it. The space is nice and all, but there are a lot of inherent factors that you don't think of when you buy a property lah.
Yeah. So landed is not for you lah.
No lah, no.
Yeah.
What about you,
I
Jason?
think I also feel the same. I mean, I have not had the chance to own a landed, but when I was living overseas, doing work exchanges, when I was staying with people on the farm, it's insane the amount of work that they have to do in terms of the repairs in the house. And in places like Europe, in Australia, they don't usually hire people to do.
Yeah.
They
Correct.
like
It's very
to
expensive.
DIY themselves
it's very
also.
expensive.
So there's non-stop work to do when doing a maintenance for landed. But beyond that also, I think with landed comes the sacrifice of not having views as well. So that for me is also another factor whereby landed might not be landed might not be suitable for me. Yeah.
Yourself?
Yeah, I mean, so like with this point, right? That's why you can see actually everybody's goals and objectives are very different. If I have all the money in the world, I will buy a landed.
Okay.
Because I have so much money, I can just hire people to like clear all these things for me. Right? When I stay in a landed, I have the space. I like the luxury of space. I get to bring my family in, even if let's say I get bring my like grandma, grandparents, and everybody stay together. So
But you can buy like the condo and buy like different floors if you have all the money.
Yeah
in the
lah,
world.
but
Then
like-
everybody stay in different unit in the same floor.
just
But not as big as landed lah.
correct.
Yeah.
Different kind of vibe more. So
buy a
that's
building.
why I think like there's no one best type of housing. Everybody have their different goals lah.
Right.
Yeah.
Okay.
Interesting.
Then Silas, for yourself, when you're looking at your buyers these days, especially if let's say they're buying for own stay, how would you recommend what would fit best for them?
Wow, actually really quite difficult because when you're buying for own stay, I always tell my clients, only you will know your own family situation and your own needs the best one. Like no agent or anybody can like tell you that you should buy this and buy that. Our job is really just to like advise based on like which road you choose. I tell you it will lead where and how is the future so-called gonna be like. So buyers really can be like all walks. I have like buyers who can afford like condo, they buy HDB. I have buyers who like can afford HDB but then like I want to stretch to like condo, borrow money, all that also have. So really very hard to say.
Right. And within the market itself, there's also this particularly special type of property for essentially the sandwich class, EC itself. So EC has been stirring quite a lot of waves in the market these
Executive
days.
condos.
Yeah, exactly.
Especially the most recent launch.
So actually, why is EC so special? What's so good and what's maybe not so good about it that people might be missing out on? Yeah, especially Silas, for yourself. Your clients recently were also looking at the new Orel EC, right?
Yep. Yeah. Personally, I'm a super big fan of EC. Just because I feel that like every time when people look at property, it's either like I stay or I investment. But EC is really something that like you can stay and make money out of it. It's very similar to like just buying like a BTO or whatnot. And I think over the years, EC has gotten so popular because the price gap between the executive condos and the private condos, new ones of course, the counterpart has grown by significantly a lot. So with the same budget, you could only be looking at probably, I don't know, maybe like from a 3-bedder EC, same budget, you look at maybe a 2+ study private condominium because you don't have the down payment or whatnot lah. So based on the size that you can get, it's really value for money.
So just as the example, recently with Orel, EC versus Parktown itself, pretty much side by side lah, right? Even though Parktown is integrated development, but Orel is really within walking distance. So like you mentioned, for the same amount of money, you can get so much more bang for your buck at an EC. So 3 bedrooms over there are starting from 1.4, whereas in Parktown itself, it's about 2 million.
Yeah.
Without 2 million, you cannot even consider anything for a 3-bedroom.
Oh yeah,
Yeah.
and to jump right in, right? So sorry to interrupt because the news I just saw today that I sent to my client who are looking at the EC, right? Park Central EC, which is also at Tampines, now TOP already. So
Oh yes.
back then when they buy, now bounce out unit selling at already sold. I saw the chat 5 minutes ago, already sold 1.792 million. The person who bought it on launch day bought it at 1.1 million.
Wow.
Haven't even MOP. They only TOP and take keys only. And developer bounce out. They are selling at 1.792 and it's sold already within like a day.
So almost $600,000 of profits gone from that guy also. Go into the developer's pocket.
Why you do that? Okay.
Yeah.
Hey, actually, usually EC, if there's a bounce out unit, it's quite sad one. Yeah, there's a reason why it got bounced out.
Yeah.
Yep.
So cool. So you're saying the price gap for EC is one of the main advantage, and it's something that you can use for both investment
Correct.
and own stay as well.
Correct.
Yeah. Christine, yourself, what do you think? Why are ECs so special?
I mean, I agree with the price gap, and because of that, you have this very strong like MOP effect.
Okay.
Yeah.
MOP effect. Ooh.
Yeah.
The
So
new term that I heard. MOP.
yeah. So one thing is because you're buying in at a like discounted price, right? So that is actually a Singapore privilege. Yeah, because you need to have at least a Singaporean in the like family nucleus, then you can buy EC ma. Okay, so like buying in at a discounted, subsidized price, when you're selling your EC next time after 5 years when you MOP, your price point is actually quite similar to the surrounding area of condos.
So maybe
Yeah.
before we go in, you were sharing about how only Singaporeans can buy EC. Maybe share with us a bit about who can buy EC and who cannot.
Singaporean privilege, so must have Singaporean in the nucleus. So PR can buy? Can buy? 不可以呀. Yeah. So they only can buy after MOP.
Okay.
Yeah. So at overall level, ECs are a bit more stricter than HDBs itself. So whatever ruling, whatever eligibility that HDBs have, think of it is applied onto ECs with an even tighter and stricter eligibility criteria.
I think one more thing also to add on is that with EC, they have 2 different payment schemes, which also help to kind of elevate some of the Singaporeans that wants to, in a way, upgrade from a HDB to a
Right.
like EC.
Share with the audience what these 2 payment schemes
So
are. And
I mean, it's
the advantage.
one is the usual normal like the payment, right? Where you go by after the foundation and all the different stages are done, you pay by percentage. But there's another one that it's actually called the deferred payment scheme. So you just need to pay down 20%, and when you are there about going to collect your keys, you have 6 months period to actually sell your HDB. Yeah, and
Right.
so there's no time lapse between you moving from your HDB to your EC. So it helps people who wants to upgrade lah.
Yeah, so unlike buying a new launch condo itself,
correct.
where you do have to sell and then try to get that
Rent
money,
a
if not you have to
place,
pay
yeah.
ABSD. EC is a bit special because of
Correct.
the kind of allowance that the government has provided.
Correct,
Because HDB and EC have similar rules where you can only own one at a time and you have to hit the MOP as well, which means that you have to stay in it and it's not a clear-cut investment option. Yeah. Aside from that, I think ECs have been seeing quite a bit of price growth and price appreciation, like Silas, what you say about the investment value. So something that we have seen also in terms of the charts wise, Christine, you want to share with us how the performance of condos
Yeah.
versus EC have been?
Okay, so I mean, like when I went to search about this, and I find that the results are actually quite shocking. So some people might think like, oh, you know, like private market, because they cost so much, right? It's probably like the one that makes the most money. But if we look at HDB, EC, and also the private like market, from the past 10 years, EC actually make the biggest growth in prices.
So about 89%.
As compared to like 50, 40.
Yeah. So 89% for EC, about 52% for HDB resale, and about 44% for condo resale.
This is also why I pushed my father to buy an EC.
Did your father push you out of the house?
So, yep. Then just now you're talking about something about the MOP effect. Maybe you want to elaborate about what this MOP effect is.
So I went to, so why I decided to push my father for EC is because I went to research a little bit more and understand more about EC lah. So if you take a look at this chart over here, right, you can see that East Point Green and Simei Green condo nearby each other at the same area. The price point when it first started, so Simei Green is the EC. You can see my orange star right at the left side. You can see the price point. That's what Silas mentioned just now, right? With like the price margin.
The gap lah.
Yeah, the gap. But if you look at the last, like say 10-ish years, like from 2026 all the way to 2020, the price point when they get into the resale market is actually very similar.
So they're treated the same as a private condo itself, but at the entrance, that time they can get a cheaper price.
Correct. Yeah.
Okay. And you were saying that this MOP effect also happens across other ECs, right?
Correct. So that's just one example, right? So this one is actually at Choa Chu Kang. So Acres over here, April 2023, they have like 124 transactions that's profitable, 0 unprofitable, which is most important. Okay, and some people might say, you know, like, this is the COVID surge that we talked about just now lah. Just because of COVID surge, not counted in that sense. But if we actually take a look right now, currently, 2 years from then. Yes, okay. So from just 2 years apart, there's actually 358 more profitable transactions and still with 0 unprofitable.
Right. So something that we are seeing EC is that you can buy it for your own stay and then you can definitely still make quite a bit of money, like the Park Central case as well. Yeah.
Yeah. But
go ahead.
No, but I guess like there are also cons to a EC lah.
Share with us. Share with the audience what are some downsides to EC that maybe they haven't considered.
The other time, like when we were considering with my dad as well, something we were thinking about is like the longer lock-in period.
Elaborate further, what do you mean lock-in period?
So like, for example, if you were to build the EC, it takes like say 3 years, plus your MOP, you need 5 years. Adds up together, it's like 8 years.
Okay.
Yeah, so as compared to if let's say, if you are capable of going into a private market, your holding lock-in period is only 3 years. So there might be like time opportunity misses and like opportunity cost lah, basically, that you might miss out on. So it is a con, but like it depends on also your family situation. No?
Yeah. So for EC, you're locked in for that period of time. You cannot really do anything else. Yeah. Anything else that other EC potential EC buyers are looking at that they might overlook in terms of a blind spot, in terms of something that's negative?
I think when it comes to purchasing your EC, your situation, to add on to what Chrissy mentioned about the 8 years. So, like, what's the big deal about locking down for these 8 years, right? I think a lot of people don't realize is that, let's say, for example, if you are purchasing an EC at the age of, let's say, like 35, for example, and you need to be very clear that the next time you we don't say like, asset progression, we don't say anything. The next time you move out of your house is 8 years later in your 40s. So, be it, for example, you're thinking that, okay, I'm going to buy a 3-bedroom now, and I want to eventually have like a 4-bedroom unit. It can be new, it can be resale at that point in time, whichever. But the purchase that you are going to make will be affected by your loan tenure, as well as your monthly installment and everything. So it will make this next purchase like slightly harder, because now you got to top up a little bit more cash if your loan is lower, or even if the loan amount remains the same, because your tenure has reduced, your monthly installment has increased, and that would affect cash flow, monthly cash flow, and perhaps family lifestyle lah.
So in summary, you're saying that this lock-in period essentially affects your age, and with your age, it affects your loan and your future cash flow. Is that correct?
Correct. To sum it up, yes.
And also, I think like for EC, there is that huge amount of the cash outlay at the beginning because of MSR,
Oh yeah. Correct. Good point.
Yeah. You want to elaborate a bit more
the
about that?
mortgage servicing ratio. Yeah. So because when you buy an EC, you only can use 30% of your pay to loan the house.
Okay.
Yeah. So in that sense, if let's say, and there's a cap as well, right? To
Income ceiling lah.
Correct, income
Right.
ceiling. So with the income ceiling and also the MSR, right? The max a person can loan for an EC is probably about what? 1 million?
Based on a 16K income ceiling lah.
Yeah, so if you were to look, just now we mentioned for Orel was like what, 1.7?
There's Park Central.
The Park
Park
Central,
Central, yeah, but also Park Central, you need 700,000
of cash and CPF.
Yeah, correct. Which,
Haven't add in stamp duty also.
yeah, which not everybody is able to.
Yeah. So the funny thing is, I I sent it to one of my client lah. Hey, Park Central bounce out unit. And then I forgot that like, it's they cannot afford until so much. After that, I quickly sent them another say, oh, by the way, it's just for information only, just to get a bit of feeling of the prices. I forget that actually you cannot afford until 1.7 million.
Yeah, I think these days, a lot of buyers, they want to buy EC, they're eligible for it.
Yeah.
But when it comes to the finances
The
portion,
affordability is a
Correct.
huge issue
A
lah.
lot of them will need like parent support.
You need
for
the
first time.
PAP scheme, the parent assisted program, not the election one
Yeah.
during this period.
Because
Yeah.
I have one client that actually wanted to do an upgrade to EC from HDB.
Yep.
But they actually they bought resale HDB. So what happens is
Okay.
when you buy in resale HDB, you're buying and they bought in the newest MOP ones.
Okay.
So they already paid the first buyer's pot of gold. So because of this COVID surge, they managed to still make a bit of money when they sell their HDB, but it's not enough to cover
Wow.
that 700.
Still not enough.
so they probably earn a bit of money from the
Yeah, but-
HDB, but
correct.
not as much as those who bought
The
BTO.
1,000 kind lah.
Yeah,
but-
100多千 less.
Whether it's a good decision to buy a newly MOP HDB or not, we'll be covering that in our later videos in subsequently lah. So
Nice.
stay tuned on that.
Yeah.
Yeah. So, okay, just in summary, when buying an EC, from what have been shared, you get a own stay plus investment value equivalent. The downside is that eligibility for it is tougher. The finances affordability is also a lot tougher. So not everybody has that privilege essentially.
Yeah, it's a
so
privilege.
if you guys are exploring whether you think EC is a potential path for you as well, feel free to reach out to us and we'll see if that's something suitable for you.
Are you planning to buy a home in the next 2 years
We've made an online masterclass so you don't have to spend so much time Googling.
and watching YouTube videos like this?
Sign up in the link below and become a better home buyer in just 4 weeks.
Okay, enough lah. Let's get back to the video.
Let's go. Okay, so we really talked about HDB, private, EC, different types of residential properties. But even within the private space itself, there are also different types of properties in terms of the lease,
The tenure.
the tenure.
Right. Okay.
There are 99 years leasehold properties.
99
there are
year.
99 years or even
60
freehold
years
equivalent.
even, yeah.
Yeah. So what do you guys think? Because there's always this belief that freehold is forever, it's better. What is the
Yeah.
appeal with freehold and is it justified in today's context?
I think at the end of the day, it's really based on the pricing that you manage to enter. So we all know that there should always be a freehold premium when you purchase a freehold property lah, just because it's freehold. But I think most importantly is like if today there are products out there that are freehold, but they are selling like very close to like leasehold pricing, then those I think could be a little bit more of an opportunity to look at. But if you ask me whether like is it worth it to pay the freehold premium, my question back would then be like, it depends on what is the premium. Like if the premium is like 30-40%, like is it like justifiable just to get a freehold status? And also if we look in terms of the resale property market, right, you also got to see like the leasehold property, like how much lease is remaining, whether it would it affect the next buyer who is purchasing from you. It may not affect you now, but it would affect the next buyer purchasing, which will in turn affect your exit strategy lah. Yeah.
Right. So you're saying freehold wise, might be good to pay, but don't overpay too much. Then when you're looking at leasehold, consider how much lease is remaining.
Yes, correct.
Christine, yourself, what do you think about freehold?
I think freehold, because people always say we buy freehold is for legacy, right? Because you have this land forever and ever, I can leave it for my grandchildren and grandchildren.
Next generation.
Yeah, correct. So I feel like this belief and thinking is actually very much influenced by family upbringing also. To me, I feel.
Okay.
Because I actually currently have this freehold listing. The buyers that come and view the unit, they specifically are looking only at freehold properties. Or even just as a solo buyer, they come from family that already stay in freehold. Right? I mean, I feel like because now dynamics a bit different, in the past, people will feel that home is something that is like gives them stability. Yeah. If I have a house that I have forever, I am safe. I always have some place that I can go back to. Yeah. But nowadays, people actually see property also as a type of investment. Yeah. That's when the views actually kind of change a little bit.
So there's a mindset change in terms of how maybe people in the past view freehold property versus leasehold property, right?
Yeah.
Okay.
Yeah.
So beyond the intangibles, I think something in the market also is that there's the buyer's belief that I buy freehold, the value will be better. It's better for investment value. That's one way to see it as well.
Like you mean in terms of like the growth?
The growth, investment, the price growth.
I see.
Yeah. But something that we're also seeing in the market these days is that when we look at data itself, so here we have about 2014 to 2024, about 10 years period. Somehow the freehold market, properties that are for freehold nature, didn't perform as well as
This is the whole
leasehold.
Singapore.
The whole Singapore.
Right.
Yeah. So at an average level, an overall level, leasehold tends to be outperforming the freehold. But this is something that interestingly might not apply in all areas of Singapore.
Agree.
Yeah. Do you guys know potentially what kind of areas where freehold might hold a better value or even higher investment value?
I would think what naturally comes to my mind would be an area that predominantly has more freehold than leasehold lah. And just because of the sheer number of it, there would be lesser leasehold transactions going, hence the freehold would bump up more.
Yeah, I mean, I agree.
Yeah.
I agree.
It is true that certain areas where there are a little more freehold and buyers naturally, they go there, they want to buy something that it's of freehold in nature.
Okay, maybe like, because I mentioned about like family upbringing, right? So maybe places that have more freehold because people have been staying there already. That
They're
would
used
also
to-
influence their next generation to also look for. So then they will stay around the area.
Yeah.
I go with D15. Ding, ding, ding.
District 15, for our audience information, is the Marine Parade
Katong.
Katong area.
East Coast,
Tanjong.
Yes.
East Side, West Side, anybody?
Which recently has a walkover because there's no other contestant. Just a fun fact, okay?
Moving on.
But is she correct?
So, what we've seen is that in recent years, certain districts, for example, like the Orchard Road, River
Orchard
Valley,
Road.
Cairnhill area,
District 9.
District 9.
Right.
This is where the freehold and leasehold didn't perform similarly to the overall market. Here it's on par. So which means that doesn't matter freehold, doesn't matter leasehold at an overall level. If you bought
Okay.
anything in the past
10 years.
9-10 years, the results would have been about
Okay.
the same.
Okay.
Yeah. Not jumping into specific developments or units itself.
Yeah.
Then another area also, District 1.
Oh.
So Cecil, Marina, Raffles Place, People's Park, Boat Quay. In fact, the leasehold properties here didn't do so well. Honestly, I also have a personal experience because I also have a client who is trying to sell his unit in the District 1 area.
Right.
And it is a leasehold property. It's an old leasehold property. So
Old leasehold
It's
property.
1996 and it's on top of that, it's also an apartment status.
Ah.
So everything doesn't work in his
yeah lah,
favor.
Don't
Although,
don't align this one.
Yeah, he's been holding for quite a while already, so he has made profit, but
Is it facing like some form of lease decay at least? I mean,
definitely,
Wow.
yeah. So that's definitely something that buyers
Oh no.
will be a bit more apprehensive to enter at this
Condolences.
point of time. Yeah, so District 9, District 1.
Dangerous district.
But very importantly also, this is actually
so it's District 11, is it?
Yeah.
Right.
So one is missing.
Yeah, the one disappeared.
Yeah, so since when Newton Novena is District 1? Okay.
Yeah,
Typo.
so the
Okay.
Thompson, Water Estate, Novena and Newton area.
Not surprising lah. There are really like a lot of freehold and like leasehold. In fact, the leaseholds are mainly just the newer ones like Copa, etc.
Yeah, so those that are leasehold is at a disadvantage when they are going to this area.
Yeah lor.
So in a way, you kind of also want to look at area when you want to buy into leasehold and freehold.
Yeah, for sure. You need to look at the specific area.
Yeah.
So it's not a blanket statement to say that freehold
Correct.
is best or worse, or leasehold is better or not so good. Eventually, it really matters based off the area and based off the property that you're looking at.
学会了吗？学会了吗？
Yeah. So, beyond that itself, when we look into freehold versus leasehold, something that we talk about, it's about premium amount that you are paying, which also leads to finances. Do you guys see buyers out there facing any kind of blind spots or mistakes that they make from a financial standpoint?
Right. So I think for myself, one very, very common blind spot that a lot of private buyers don't look at, and I specifically say private buyers because of how the total debt servicing ratio that the bank assess you based on works. So when they want to purchase a private property, according to TDSR, the formula of it is that the bank recognizes 55% of your income, and then they will minus off any monthly installment of debt that you have. So it could be a car loan, it could be a renovation loan, credit card,
School.
school loan, any like small thing like guarantor even sometimes. So with that, right, sometimes when the bank grants you your maximum eligible loan amount, it doesn't factor a lot of things into it. For example, things such as tuition fee for your kids, enrichment classes, insurance premiums, your allowance to parents, to children, to your spouse, etc. These are monthly expenses that are not covered in the total debt servicing ratio. And if you are just basing off 55% of your income to calculate, right, you may end up in sometimes I've seen personally also in a negative monthly cash flow because of these other expenses that add up quite a bit. Like you go to like Eaton House, it's like $2,000 a month. Taekwondo class $500 a month. Give parents $1,000 a month. These are things that would just add up lah. So
Right.
yeah, that's a very common blind spot when we are working on affordability.
Christine, yourself, any blind spots that you see?
No, I think just like stamp duty itself is quite a high percentage also.
Oh yeah. Especially
so,
now.
Yeah, that's something also people might miss out lah.
So it's talking about some of the additional expenses that go beyond the purchase price itself.
Correct.
So your stamp duty.
Legal fee, but
Legal
mainly the stamp
fees.
duty lah. That's the
Yeah, that's
big
like
bulk
the
of it.
bigger. Yeah, correct.
Yeah, and I think also recently, I think for buyers who are this side track, but for buyers who are looking for a commercial property, please remember to take note of the GST as well. It is 9% if you're buying like commercial property from a GST seller lah. This is something that one of my buyer overlooked before he met me lah.
So the hidden cost of buying a
Yeah,
property
it's
is
really a lot of
actually-
hidden costs.
Lucky
Okay.
he met you.
Yeah, almost. He was sending me listing and then he like, hey bro, this one like looks like okay. Then when we were working at the sum, then like, then he, hey, how come
Not
got
enough.
GST?
That's
Then I said, oh bro,
why.
you not GST registered. I said, oh no leh. Then okay. I thought no ABSD, so I buy. But then there's GST.
Right. Okay, so when we talk about finances, I think a lot of worries will always be on the interest rate itself because it's the main financing.
Bum, bum, bum.
Yeah. So today, with the fluctuations in the market, the waves that we are seeing, when a buyer comes to you and they're asking about interest rates, whether they should go for floating or fixed, how would you recommend your clients?
We'll listen to Silas here because he's the expert.
So,
okay, so with some limited knowledge that I have, I've actually went to do a little bit of math instead of just I feel this is better, that is better. Next slide. So this is going to be a bit intensive. I'm trying to go a bit faster than usual. So on the left, we can see this is the data of interest rate based from April 2023. So in April 2023, let's rewind back in time. This particular bank, don't see the color, don't see anything, is offering 2 years fixed rate at 3.85%. They are also offering 2 years floating rate or 3 months SORA plus 0.65%. The 3 months SORA at that point in time, based on the MAS domestic interest rate, is 3.6%. So in short, at that point in time, if you are a buyer, you could either select 3.85% fixed for 2 years or you select 4.26% floating. So at that point in time, I don't say the banks later they come after me. People were saying that, you should take floating because traditionally fixed rate is higher than floating. So if floating is higher than fixed at this point, it's a clear indication that interest rate is going to drop. Okay, so at that point, this was the story . So I fast forward to if you have taken a 2 years rate, right?
Yeah.
April 2025 now, what will you have experienced? Okay, currently, the 2 years fixed rate is at 2.53%. So yes, interest rate did drop. And the 3 month compounded SORA that banks are offering is at plus 0.7% spread. And the SORA is at 2.47. Okay, so first up, we can see that the gap of the fixed and floating last time at 2023, the gap was only 0.41% difference. Now the gap has widened at 0.65. So is it even more should take floating because the gap is so big, right? Means it's going to plunge. So the next slide, what I did was I went to tabulate the past 2 years of SORA historical rate, and just for simplicity's sake, I went to divide the actual SORA rate. So in the past 2 years, if you have taken a 3 month SORA plus 0.65%, your average interest rate would have been 4.14%. So the average of the 2 years of SORA works out to be 3.49, and if I plus the spread of 0.65, you would have paid 4.14% for the 2 years as compared to 3.85% that you have taken fixed.
So back then, if you have taken fixed, you would have been better off.
Correct. Of course, we don't factor in things like amortization and whatnot, just simple math .
So moving forward from if buyer today, 2025, wanted to make that decision, would the results still be the same?
I say you check with the bank. No lah, if I were to give an advice, I say just take fixed lah. I say take fixed lah, because I really don't know. Nobody can predict where the interest rate will really go, right? Now it's so crazy. You take the fixed, at least if it goes up, goes down, it wouldn't affect your monthly expenses. Like if you know every month I'm going to pay this amount of money to the bank, I can budget my family expenses better rather than this month pay $100 more, then next month okay $200 lesser, but then it's suddenly $500 more. Yeah, it's easier to plan lah.
So overall, there's the peace of mind that comes with taking fixed as well, considering that you don't know how interest rates will be like. Yes, a lot of people are saying it's going down, but at what rate, how fast, and when will it go down, and what's the bottom? So if you guys are also in the market considering to refinance, considering to purchase a new property, and you're unsure what loan packages might be suitable for you, feel free to reach out to us also. So just before we wrap things up, any last words from you guys in terms of what you're seeing in the market these days? Some of the common mistakes that buyers might be making or whatsoever that you feel buyers in 2025 should know of?
I think generally, when you're making this big purchase, it's always good for you to understand what is going on in the market. It's like if you're buying a car and you don't know the brands, you don't know if it's manual or auto and how much the oil usage and stuff like that. So buying property is an even bigger item. So it will be good for like viewers out there who are thinking to purchase a place to really understand the market first and see what actually suits your current situation and your needs and goals. Yeah.
Silas?
Yeah, and also I feel that if let's say buyers out there who are looking to engage an agent, or if you have already engaged an agent, I think it's very important to be able to engage somebody that you trust. And if you already made up your mind to trust that person, then like listen to that person's advice rather than like keep going against like what your agent is saying, or like doubting. Like if at any point in time during the whole process of house searching, right, you feel that like, I'm starting to not trust what the agent is saying, then you can always like terminate the agent and change a new one. Like I rather you find somebody that you can trust than you are always doubting what your agent is saying. I think that's very important.
Yeah, I think like cause working to like actually you and the agent, you guys are working together as a team, right? Rather than
Correct.
Right. So what Christine said is make a plan. Don't make a rash decision. And that includes also who you work with.
Yes.
And once you choose someone that you really trust, then remember why you trust that person. But if for whatsoever reason you might not vibe with that agent anymore, also make that decision to plan for. Okay, so if you guys have enjoyed our session today and learned about new things about buying in today's market, actually we have also launched a free online masterclass for home buyers to help you guys become better home buyers today.
Yeah.
So if you are someone who is looking to purchase a property in the next 2 years, especially a property that you're going to stay, feel free to sign up for the masterclass with the link below. Yeah.
Masterclass.
So thank you guys so much for your time, and we'll see you guys in the next episode.
Bye-bye.